Hello. Um, I'm going over question 7 on the week 12 quiz access for chapter 8. So the question reads, the DS company owns a small machine that costs $126,300 and has an accumulated depreciation of $93,000. Prepare the entry to record the disposal of the machine on January 1st in each separate situation. So situation 1, the machine needed extensive repairs and was not worth repairing. Diaz reported or disposed of the machine and received nothing in return. Scenario 2, Diaz sold the machine for $15,600 cash. Diaz sold the machine for $33,300 cash. Scenario 4, Diaz sold the machine for $41,700 in cash. So they're asking us to record the entries based on the overall accumulated depreciation of the equipment compared to what they purchased that equipment for, and then if and what they sold it for at the end of its life, not needing to repair it. So I just, again, using Excel, broke out a little bit of my own little calculator across the board, just to record some known information that we have. And then I'm deciding whether or not it's a loss or gain. So my calculation is broken out, as you can see on the screen. The reason I do this is just it allows me to kind of better understand how the company expense to cost. So I look at cost as a negative aspect. And that's why my formula looks the same way it does. Just for me, it allows me to understand it. So the company paid or reduced its profit or revenue, reduced the income in its bank is an easier way to explain it. So therefore, we took out $126,300. If the company didn't depreciate over time, it would be worth or need to be discarded for this total amount. But because we've been factoring in the accumulated depreciation over time each year, we understand at this point it's depreciated to the extent of $93,000. So that allows us to understand kind of, at least for me, my perspective, whether or not we are losing money in the long run with this equipment or we're gaining money in the long run with this equipment, in addition to repairs. So with this calculator, it just allows me to better understand the equipment's relation to the company. So we took out $126,300 from our bank account, and then we kind of almost posited ourselves that depreciation over time in an effort to kind of reduce the impact this piece of equipment had for me. So that's the easiest way I can see it, or I look at it over the course of time. So if the company just flat out discarded it, it tells me that it was a loss that the company took overall for this capital. So I had to record that expense in the journal entry here on the sheet. So I start off by just breaking down the accumulated depreciation. This is the machine. And that accumulated depreciation was $93,000. And then I have to balance out my account. So again, it's a loss. So it's debited out of our bank account, meaning that we're now recording that loss. So loss on the disposal of the machine. And that loss is reflected here, $33,300. And then the positive or the credit side of this needs to balance out. And that is in the form of recognizing the actual expenses on the machine. And those were credited for the total amount we purchased, $126,300. So scenario 2, record the sale of the machine for $15,600 cash. So it's still less than $33,000. So we're going to also record a loss here, $156,600. So this loss reduced because we gained money back in our bank account. So with this loss, again, we're going back. So I'm debiting the cash against the cost of the machine to the form of 17700. Debiting the accumulated depreciation of the machine, $93,000. Sorry, we took cash. This is wrong. Cash was 1,500. And then the total loss on the machine on this form, loss on disposal, was 1,770. And again, recognizing on the other side of the balance sheet, the machine itself, or the journal entry, not the balance sheet, is 126,300. So we sold the machine for $33,300, meaning that we don't have a loss or a gain. We balanced out across the board. So again, we're recording the cash against the machine. 33300. Total accumulated depreciation for the machine, 93000. And then since that balanced out, we're just recognizing that against the machine on the journal entry, 126. Now, the last entry, we sold the machine 41700. So we profited or gained actually revenue off of this machine. So accounting for the depreciation over time, we actually made more money than we thought the machine was going to make it. So recording the cash, 41700. Recording the accumulated depreciation of the machine, 93,000. Total cost of the actual machine, $300. And then we also record a gain on the disposal of the machine to the tune of 8,400. So again, keep in mind that your numbers might be different on the report. So obviously just enter your numbers in. Feel free to use the calculator I have or do the math however it works for you. Coming up on the top and checking my work. Glad I'm showing this. Return to question. Loss on sale. Check my work. There we go. Oh, nope. That's a gain. See, everything's not perfect. I'm not paying enough attention. This is a gain on sale. There's the machine. Now I check my work. And everything comes out green. So hopefully you guys can make the right entries. Obviously, it wasn't a disposal because we actually sold the machine for some sort of cash that sale needs to be recognized in the proper way. Good luck.